Menendez of New Jersey is recognized.
Thank you, Mr. Chairman. A lot of securities regulation essentially comes down to one thing: what actions are and are not permissible when one person is handling another person's money. And by and large, we in Congress, the securities industry, and the general public have agreed on the major principles that should guide that activity. For instance, as you point out in your testimony, Professor Allen, brokers are not permitted to use customer funds to finance their business. They are required to fully disclose conflicts of interest. And when dealing with retail investors, they are required to go further and mitigate certain conflicts. FTX didn't seem to have done any of this, and if they had, it seems like a lot of harm would have been prevented. So, Professor Allen, is there any reason why we shouldn't apply the same broad regulatory principles that are now in place with the traditional financial sector to digital assets?
I see no reason. The reason we typically hear is that crypto is different because it's decentralized, but in fact, it's not decentralized. At every level, there are people controlling things. So, we heard that that Bitcoin was decentralized. Well, Bitcoin is controlled by a few core software developers, fewer than 10, and they can make changes to the software, and then that software is implemented by mining pools, and there's just a few of them. So in all these spaces, there are definitely people, often a very few people, pulling the strings, but the fact of the matter is that they are unidentified and unregulated, and that is not an ideal space to be in.
Yeah. Mr. O'Leary, in your testimony, you said you hope that the events at FTX would, quote, put renewed focus on implementing domestic regulation. Do you agree that FTX customers and perhaps your own investments would have been better off if FTX had complied with the existing regulation we have that bars brokers from trading with customer funds?
Absolutely. Yeah. But they were not compelled to do that because they were offshore and unregulated. I think the model will not work. There's examples of how regulated exchanges that are attached to broker-dealers have worked. You only have to look up to Canada, the OSC order, where BitBuy wallets are controlled by the regulator. They limit the number of tokens. They limit the margin. They limit the lending. They do an exhaustive test of proof of reserves. That's just the rules they implemented that they just copied from their own exchanges. Right. We need to do the same thing here. It works. It's been proven to work. There's millions of Canadians that have accounts that are working under a very strict regulatory environment. We can implement the same.
Well, I agree. We already know what should and should not be allowed when one person is handling another person's money. Whether we're talking about a new celebrity-endorsed coin or an index fund, I think we'd be well served to keep in mind the basic principles that have largely saved and served investors and the markets well for decades. As I was listening to some of your testimony back in my office, it all seems like you looked at this as more of a security than a currency at the end of the day, and that makes it pretty clear for me. In the wake of FTX collapse, many crypto firms have attempted to reassure the public of their soundness by hiring outside auditors to provide proofs of reserve. However, the quality of these audits are inconsistent and oftentimes provide an incomplete picture of the company's assets and liabilities. Professor Allen, can you explain some of the flaws in these reports and why they are not as helpful to investors as the crypto industry claims?
Well, I mean, there is the fundamental issue that where do you even get the valuation number from these assets? Do we treat them on a sort of a fair value accounting basis? If so, we're essentially accepting whatever the market says about these asset prices, and then they're entirely based on sentiment. So, in addition, even if we put that aside, the actual attestations, et cetera, that we're getting, as I said, they don't have this skepticism that we expect from professional auditors who look at the financial statements to find red flags. They're required to look for red flags. In these attestations and proof of reserves, it's basically just the accountants sort of reporting what they've been told by the industry.
No. One of the things I'm concerned about is the extent that cryptocurrency becomes integrated with the financial system, and therefore the risk to the financial system, which up to now has been pretty stable. And that is something I'm concerned about. Let me close on this. Prior to its collapse, FTX was well known for huge spending on celebrity endorsements. Dozens of sports stars, actors received millions of dollars to generate hype for FTX and assure the public that crypto was a safe investment. There have even been reports that FTX was pursuing a $100 million sponsorship deal with Taylor Swift earlier this year, even as the firm was hemorrhaging money. So FTX isn't the only firm doing this. Endorsements from public figures are just one of the factors contributing to misinformation about crypto. Mr. Shanken, how can we combat the spread of crypto disinformation and encourage investor education?
Use words that are accurate. The cryptocurrencies are not currencies. We need to classify them as securities properly. I also think that we should consider treating crypto like gambling and having potential limitations on advertising and disclosures.
Thank you, Mr. Chairman.